program, Mr. Michael Manahan. He's a spokesperson for a company called First Global Financial Corporation, stock symbols FGBF. Mike, good to see you again.
Well, thank you. It's good to be here, as always.
Yeah, it's great to have you back on the program. Now, First Global Financial Corporation, they describe themselves as a company which is purchasing real estate from failed institutions. Give us a general overview of the company, if you would.
Well, that pretty much sums it up. As you know, there's a huge inventory of properties out there that are owned by banks. They're desperate to unload these properties, and the market opportunity for us is to go in there and buy up those properties at significantly below market value.
Well, really what we're talking about are what are known in the industries as REOs, short for real estate owned. These are properties that went to foreclosure auction, for whatever reason didn't sell. Now the bank or the institution kind of feels like they're stuck with them.
Exactly. Everybody seems to think that the banks auction off these properties, and savvy investors and lucky consumers are in there snapping them up. In fact, most auctions are failure. The title goes back to the bank, and now what does the bank do? They've got no option but to unload it, and they're unloading them at unbelievable prices, and that's where our business opportunity rests.
Well, it's kind of amazing because I probably at no time, at least in our lifetimes, have we seen the kind of inventory that is available out there to essentially snap up. Now, the company's business model, as I researched it, is to buy these properties and turn them into rental units. I would have to think that some of these properties, because they were foreclosed upon, been vacant for a while, are going to require some fit, finish, and repair to get them into rentable condition.
Well, that's true, but we're being choosy about the properties we're buying and also the communities in which we're buying them. We do expect to have to put some money into refurbishing these homes, but quite frankly, we want to do that because a home that's been refurbished is going to attract a better tenant, and we're also going to be able to generate more cash flow out of it. Remember, renting is part of our strategy, and you get more rental income from a property that's in good condition.
You know, it's amazing. I can remember when my, just a couple of months ago, my mom and dad, who live in Maine, took a trip down to Florida on a real estate speculative buying trip, and they were looking at homes that were in 2006 selling for $300,000 that you could buy for $70,000 or $80,000 today. It's amazing what's going on with the markets. Again, First Global Financial Corporation, stock symbols FGBF. For more information, please give us a call, 888-259-4449. Now, Mike, I would imagine with all the record foreclosures and some people now having a difficult time to even qualify for a mortgage, there must be a pretty good market out there of available renters.
It's actually unbelievable. I was just reading a report. Demand for rental properties, residential rental properties, up by as much as 34% in some areas. An associate of mine owns a number of multi-unit residential properties down in Texas, apartment buildings is what we would call them, and they actually have waiting lists of people to get into those units. It's incredible.
So the company feels pretty good about when you've already begun acquiring properties. You don't feel there's going to be any difficulty, finding renters for these units.
Well, when you consider that there's been hundreds, I'm not sure if it's hundreds of thousands, but it's certainly thousands upon thousands of homes where people have been foreclosed, and those people have had to vacate those homes. They have to have a place to live.
Sure.
So if they're not going to live in the homes they were living in that have been foreclosed on, they've got to find a place to rent.
Okay. Well, Mike, let's talk about the properties that the company has been acquiring. You've announced several in the last few weeks, ranging from multifamily and retail units to single-family units. What is it the company looks for when it's targeting a unit to acquire?
I think we look for the kind of things that most people would look for when they're buying a property. We want one that's an attractive property with good curb appeal. We want stable communities, not these new communities that were built and people moved in and they're now all moving out, but stable communities that have been around for a while. And a property that we can go in and for a modest cost improve the look and the feel of that property, make it more attractive to the rental market. We're targeting communities primarily in the Midwest. We're staying away from the coasts, which tended to be a lot more inflated than the central part of the country. And our kind of target home, after we've acquired it from the bank, after we've put in the money to refurbish it, we should be somewhere around 60% of of true market value in that community for that home. So right off the bat, by the time we've completed the transaction, in effect there's an inherent profit in the asset.
Once again, First Global Financial Corporation, stock symbol FGBF, and our toll-free number good from anywhere in the world. For more information, 888-259-4449. Now, Mike, does the company also plan to manage the properties that you acquire, or we end up hiring a management company? What's the game plan on that?
We're certainly going to use local service providers who know the local communities, but we're not going to be hands-off investors. We want to actively participate in the management of these properties, and in particularly making sure that we're generating cash flow. I mean, this is a cash flow story. Buy an asset, generate cash flow off of it. As the number of assets we own multiply, the incremental cash flow from each asset is going to be important. So we're definitely going to be involved. We're definitely going to be looking at maximizing cash flow from each property we own.
Well, anyone who would check your stock quote on any of the services online will see that you've issued a number of press releases here recently where you've announced acquisition after acquisition after acquisition. Do you have a goal with respect to the number of properties that you're planning on acquiring?
You know, I hate to be vague when answering a question. Obviously, there's two factors that come into play. One is capital available for making acquisitions, and the second one is market opportunity. We don't want to be imprudent. If we had a $1 billion war chest, I'm not sure we would want to spend it all, because we might end up with properties that don't meet our target return on investment and cash flow. Alternatively, I think we have a target that's doable. We've already acquired 5 properties, and with what's left in the year, we think by the end of the year we can have more than 100 properties under our belt. And even better, in the process of acquiring those 100 properties, really refined our system of how we buy the property, value the property, buy the property, close the transaction, refurbish it, get it into the rental market, and move on to the next deal. So that's kind of the phase we're in right now.
Okay. Well, how does the company plan on financing the acquisitions? I mean, because 100 properties between now and the end of the year is an ambitious goal. How do you plan on financing that?
Right now we're raising capital by selling stock in the company, and in fact that's part of our strategy, because the thing we don't want to do now is try and fool around with the debt markets.
Okay.
The debt markets are in turmoil. The lenders don't know whether they want to lend money or they don't want to lend money. The only people who can seem to borrow money today are the people who already have it and don't need it. Everybody else is going to the government for handouts. So our strategy is buy the properties for cash. We'll get the best price, and we can be opportunistic. We can move quickly, close the deal, get the best price possible, get it into the rental market, generate cash flow. Then, as the real estate market and the debt market improves, we can start to leverage those properties as time goes by, put debt on them to buy other properties, and really significantly enhance the return to the stockholders.
So if I read this correctly, then a person who, say, becomes an investor in your company, a shareholder in your company, is essentially playing in this distressed real estate market, but not having to be involved in the day-to-day operations, so to speak, of managing a property.
Exactly. Just imagine if you had an extra, I don't know, $50,000 hanging around, and you said, I'm not making money in my 401k, or I'm not making money here or there, let's go buy a property. Well, first of all, you've got to deal with the banks, which are ridiculously difficult to deal with. Secondly, you've got to have some skill at picking the right property. Third, once you buy it, you've got to fix it up, hire a contractor, and then you've got to find somebody to rent it. And your whole portfolio is tied up in that one property. Now, like any business, you're going to have some good customers and some bad customers. You're going to make some good buys and some bad buys. We can spread the risk across hundreds of properties, hundreds of renters. We'll have 1 or 2 bad ones and 1 or 2 properties that don't do well, but overall we'll make a lot more money. And for the investor, by putting money into our company, it's hassle-free. You don't have to deal with finding renters, deal with contractors, filing tax returns and everything else, all the reporting that goes on with running and managing that particular property.
Mike, less than a minute left, but why is it a good time right now for folks to take a closer look at what you folks are doing?
You know, to me, buying stock is all about timing. The whole market is about timing. I mean, where do you want to put your money? General Motors or Citicorp? I mean, God forbid. The market, I believe, is going to really be led by the micro-cap and small-cap stocks, and particularly ones that are foraging businesses in new markets, markets that didn't exist 2, 3, 4, 5 years ago. This market of buying distressed assets, renting them out, and then eventually cashing in on them didn't exist 5 years ago. It exists right now. When the S&Ls crashed in the late 80s, companies were in there snapping up those real estate deals, and they made a ton of money. And I believe that we're going to be one of those companies that snaps up the real estate that's available today and generates a significant return for our stockholders.
Stock symbols FGBF, First Global Financial Corporation. Mike, we're initiating coverage of the company this week. Be watching you pretty closely over the next 3 months. I'd like to get you back in here for some updates as you go along.
Absolutely.